Hello, this is Patrick White from AA Commodities and Investments with your Friday, August 23rd market recap video here. As you can see, we had a lower day across the board. Besides the wheat market today, we had December corn down 3.25 cents at 367 3/4. We had November soybeans down 12.25 cents at 856 1/2. I'm going to go ahead and start it off with a disclaimer. Just remember that everything I say is not a direct trade recommendation. It's just my opinion. With that being said, if you'd like to read the full disclaimer, please pause the video and do so. Today, we're going to be talking about some of the news that came into the market here this Friday morning. We had China coming in and saying that they're going to impose between 5 and 10% extra on tariffs, on 5% extra on soybeans, and 10% on corn, sorghum, and wheat there. And they really don't buy a whole lot of corn or wheat, really. I think it's just token amounts of corn, not any wheat really to speak of, but they buy a fair amount of sorghum. So that being said, though, just the news really just kind of highlighted the fact that, guess what, we're still in the trade war. We're still not even close to getting a resolution. The two countries are still pretty far away on getting a deal put together here. So, not good for the markets at all. So we're going to dive into the charts here and take a look at where we could go with that. So December corn here, really today, just a really, there's a lower day in the market here, despite wheat being higher and corn sold off. We lost 3.25 cents here. We did keep the 363 3/4 low intact, but we solidly lost this 370 level. We got to close below it on Friday too, so it'll show up bad on the weekly chart as well. So I would look for that 363 3/4 mark to get tested here early next week. If we break below that, you would think that like the 350 psychological support level would be next. But with that being said, there's not a whole lot to hang your hat on if this low over here from May gets violated. So. I guess we saw some chop here. We saw some semi-supportive action, but nothing too wild, nothing too bullish to hang your hat on there. I would say, though, if we were to get above the 374 level and test that 381 level, I would start to get more excited about the corn market, but obviously not happening today. Kind of interesting on the wheat market here, even though we had that news of the tariff, the extra 10% tariff on wheat. Well, really, China doesn't really buy wheat. They banned our ag goods anyway. So with that being said, it didn't really have that big of a bearing on the wheat market here. So they tested lower on the news, tested all the way down to 465 on the December contract, and we've rallied from there. So really, I think the wheat market's just rallying. This is our third day. It's rallying towards this 483 to 485 level. And I would be a seller there. Just take a stab at it, 483 to 485. I think we're going towards this high that we made on August 14th. If we get above there, I would still be bearish at 495, but that would be my two areas to be basically 483 to 485 and then 495 there. So we'll see how far this wheat market can go. Really nothing hugely fundamental. I guess we had a decent export sales report here yesterday on wheat, but nothing really hugely fundamental to get the wheat bulls out in strength here. So soybeans. We lost about 12.25 cents here today. We closed down at 856 1/2, challenged the 855 support level, and that's off this low that we saw on the 5th of August there. I think that, if we do lose this 855 level, we're probably headed down to this 845 region to test that out. Meal had a pretty poor day as well. They went down and they closed right at the 295 support level in Dees meal. And oil was down as well. Just the tariff news was not what the soybean market needed to hear. We just, with that being said too, we also broke out of this sideways triangular formation there. So we had our uptrend line back from that low in May, and then we had our downtrend line here from June, July, and August, and we were able to violate that uptrend line there. So that's not really what you want to see if you're long. So with that being said, 855 is the support level, then on down to 845, and then on down to 830 or so. So not looking very good here for the soybean market, and just the news and the demand still continues to kill the market. So October live cattle still in our trading range here between 98 and 101. Today, obviously, with the news, we were just lower out of the gate. With that being said, though, it was good that they didn't close limit down. It was good that they didn't close much near the lows. But with that being said, we're right basically smack dab in the middle of the trading range here with our close at 99.40. So yeah, like I said, we got support at $98. We've got resistance at 101, strong resistance at 101. I would look, if we could get above 101, I would look for a run to 103.50. Obviously, we're not seeing that right now. If we do break this 98 level, I would look for a run down to 96. So October hogs, we gapped her lower and got a limit lower close here on the October contract. Deferreds weren't quite as bad, but they were still down like 250 or more. With that being said, though, so we gapped down, to start the day, and closed limit down there. Broke the $62 to $61.50 support range, and markets tend to gap around support and resistance levels, so that was definitely a solid area of support there that they violated with the gap down. So I think that we're headed for the $58 mark, and I believe that's the contract low here. Let me take a look. Basically the 58.20 level, that's the contract low here from July 11th. So really this market, in order to turn around and rally, we're going to need a better expectation of better export sales of pork to China. And right now, just with the tariffs and the current environment, both sides are digging in. And so there's not a whole lot of people that aren't skeptical about the possibility of higher exports here from China. So really, without the higher exports of pork, it's tough for hogs to rally just because of the higher supplies that we've seen. So on the cotton side of things here, along with everything else, they were lower. On the demand side of things, cotton is it's majorly exported to China. And on the supply side of things too, the Panhandle of Texas, they grow a lot of cotton there. On their dry land acres, they got a lot of rain here. They got between 1 and 2 inches on Thursday. So, with that being said, we've got bearish weather, we've got bearish demand stories in the market. So we weren't able to get above the $60 mark, and we're now trading down lower, towards the bottom end of the range here at like 58 to 57.75. If we break these three lows in here, if we break this pretty solidly, we're going to be testing lower. I would imagine we'd find some support in here between maybe 55 or 56. But yeah, just not what you want to see here, especially with the test higher and the close much lower on cotton there. So I think that, just for right now, we're inside of the range, but you want to be watching this 57.80, 57.75 to $60 mark. If we have a violation of either of those areas, we could move pretty good here. So wish I had better news for you, but I don't. So if you guys have any questions here, give me a call at 712-262-7606, or go ahead and visit my website. It's got a free daily newsletter that I send out. You can go ahead and sign up for that at aa-commodities.com. So have a great day, guys, and thanks for watching. Appreciate it.